Good evening, friends. Welcome to CA Final SFM April 2023 MTP. We are going to solve the entire MTP. Every practical question we are going to solve. The first thing you have to do is to download the question paper from the website vino.in. In our website vino.in, there is a free resource section where there are a lot of articles for your benefit, and you will find there this April 23 MTP SFM question answer, both are there, so you can get it from there. Okay, so the first thing we need to do is to take this MTP in front of you. I have already recorded March 2023 MTP, so that video lecture is available on our website, on our YouTube channel. So MTP March 23, RTP May 2023 is already uploaded on the YouTube channel, and now we are going to take April 2023 MTP. So friends, my name is Vinod Kumar Agarwal, CA, and I have also done CPA from USA, and I have also got second rank in CA Foundation, 4th rank in CA Intermediate, 24th rank in CA Final. So let us start this April 2023 MTP. In case if you have not subscribed to our YouTube channel, the first thing that you do, subscribe to the YouTube channel AS Foundation. Please like the video and also share with your friend and tell them that May 2023 RTP, March 2023 MTP and April 2023 MTP SFM is available on YouTube channel. So let us come to question number 1. Very tricky question. Very tricky question for 8 marks. This question was asked in some earlier exam also. Okay, you have the following codes from Bank X and Bank Y. This is Bank X, this is Bank Y, and the spot rate is given USD per CHF. Buying rate, selling rate, Bank Y USD per CHF 1.0753 and 60. This G is not there. Then 3-month forward swap points are given 5 and 10. 6-month forward swap points are given 8 and 16. Then GBP per USD is given. GB per USD for both the banks are given to you. Then these are the 3 months forward swap points. If you look at it carefully, the swap points are in descending order. Swap points are in descending order, so discount. Forward is at discount. Forward is at discount for GBP per USD. And if you look at these two, they are in ascending order. So forward is at a premium. Forward is at a premium. So be careful. They will ask you to calculate the forward rate, and then if it is in ascending order, add. If it is in descending order, deduct from the spot rate. That basic thing you have to know. Okay, now the question is calculate how much minimum CHF amount. Please double underline this word minimum. Minimum CHF amount you have to pay for 1 million GBP spot. How much CHF amount you have to pay for 1 million GBP spot? You need 1 million GBP, and there are two banks, Bank X and Bank Y. They have given the codes. So how will you enter into deal with these two banks so that you pay minimum amount for buying 1 million GBP? Okay, very good question. This question we have covered in class also. Considering the codes from Bank X only, Now the second question, only this data you will use. For the second part, considering the quotes from bank X only, for GBP per CHF, underline, for GBP per CHF, what are the implied swap points? You have to find out the implied swap points, both bid and offer spot rate over 5 months. They have given you for 3 months and 6 months, and you have to find out the swap points for 5 months. So for that we have to first find out the rate after 3 months, then we have to find out the rate after 6 months, and between that we have to find out the rate after 5 months. Then we will be able to find out how much is the swap points for GBP per CHF. This question can have two answers. Now that is the trickier part. This question can have two answers. Look at the rate carefully. At least this you will understand. GBP per USD. Student will pay attention. It is a confusing question. Two students can get two different answers according to your interpretation. GBP per USD. GBP, 1 GBP is equal to, 1 USD equal to 1.1945 GBP buying rate, 1.1960 GBP sale rate or offer rate or ask rate. Now the confusion is, the students are aware that USD, 1 USD cannot buy more than 1 GBP, because if you look around you right now, 1 USD is equal to approximately 83 rupees per dollar, and 1 GBP is approximately, from your general knowledge, around 95 rupees per dollar or 100 rupees per dollar, which means GBP is expensive than USD. GBP is expensive than USD. So what they are trying to say, probably, that this rate is not GBP per USD, but this rate is actually USD per GBP. So now the student will have an obvious query: how will I know? How will I know whether it is GBP per USD or USD per GBP? So whatever you do, you write the assumption and solve. And similarly, if you look at this carefully, from the drafting of the question, it is USD per CHF. 1 CHF will give you 1.0750 USD. From your general knowledge, probably you are knowing that USD is expensive than CHF, not the other way. So therefore it should have been actually CHF per USD, but they have written USD per CHF. You are a student, you are in the exam, and not everybody knows whether CHF is expensive than USD or USD is expensive than CHF. Similarly, you also don't know whether GBP is more expensive than USD or USD is more expensive than GBP. So this is a dangerous question. Institute should not ask such question, or if they ask, they should write it properly. So there is a confusion. So I am going to solve it twice. One, by literal interpretation. By literal interpretation, I mean whatever they have written in the question, I will take as it is. I will treat this as USD per CHF and I will treat this as GBP per USD, and accordingly I will solve. Is it right? So first you see my answer, and then I will also give you the institute answer. So write down our answer. Our answer, in case in the exam you are having any doubt, you write the assumption. Otherwise, ideally, if this question is asked as it is, then better for getting marks in the exam, you will follow institute answer. Okay, but institute in other questions have not done in the same way. They have taken the literal interpretation of the rate given in the problem. So institute will confuse you as they have been doing in the past. Write down, please write down. If you want to write my answer, which will be different from the institute answer, please write down. We have assumed that the rates are USD per CHF and GBP per USD. So we will interpret as it is given in the problem. And now we'll start solving the question. Write down. First we need to find out the exchange rate between GBP and CHF, so that I can calculate how much CHF would be required for buying 1 million GBP. Question should be in front of you, otherwise you will not be able to understand. Please quickly download the question paper from our website vino.in. Quickly download and keep it with you. Otherwise you will not be able to understand. You will not be able to see question paper again and again. So first write down step 1, determination of exchange rate based on cross currency quotes. Write a note. What is my objective? To pay minimum CHF. So I can either buy from bank X USD, or I can buy from bank USD, I can buy from bank GBP, or I can buy from the bank Y GBP. Whichever is cheaper for me, I'll do that. And how to identify whichever is cheaper? Let us write a note. I'll explain it to you one by one. Since the requirement is for minimum CHF, the cheapest available quote among bank X and bank Y has been chosen. The cheapest quote available among bank X and bank Y have been chosen. Now let us look at the rates carefully, and then I am going to ask you a question and you will participate. If you are good student of SFM, you will participate in answering. Okay, for buying GBP using CHF, we want to buy, but the bank or the forex dealer would want to sell. So the relevant rate would be ask rate. The relevant rate is ask rate for GBP. In CHF. Okay, the relevant rate is ask rate for GBP in CHF. So I need to find out CHF per GBP. Ask rate. Now let us apply cross rate rule. I have written also here. Let us apply cross rate rule. So I need to find CHF per GBP. I will first take CHF per USD ask rate into USD per GBP ask rate. This is called cross rate rule. Okay. Now remember, I need to find ask rate. The student will go to the question. This is the question. Now these are the rates for USD per CHF. You have to tell me. Let us see who will give the correct answer. And I need ask rate. CHF per USD. I need CHF per USD ask rate. So now you have to tell me CHF per USD ask rate is cheaper where? Whether it is cheaper in bank X or whether it is cheaper in bank Y. So in that case the student will say, for understand bank X CHF per USD will be 1 divided by 1.0755 and 1 divided by 1.0750, and in bank Y 1 divided by 1.0760, 1 divided by 1.0753. This is cross rate rule. Reciprocal of buying rate is selling rate, reciprocal of selling rate becomes buying rate. So we have to basically make a choice between these two. I am going to highlight it. Which is lower number? Which is lower? 1 by 1.0750 is lower, or 1 divided by 1.0753 is lower? Please reply. If the base is heavier, if the denominator is bigger, the answer will be smaller, which means I will take USD from bank Y. I will purchase USD from bank Y because their USD is cheaper. Their USD is cheaper. Okay. And now my next question is, I need USD per GBP. I need USD per GBP ask rate. I need USD per GBP ask rate. Let us look at these rates. So my USD per GBP with bank X will be, it will become reciprocal, 1 divided by 1.1960, 1 divided by 1.1945, and with bank Y 1 by 1.1950, 1 by 1.1940. Because I am changing the base, I have to take reciprocal. Because I am changing the base, I have to take the reciprocal. Now these are the two ask rate. Which is cheaper? The one with higher denominator is cheaper, lower, because when you solve it, 1 by 1.1945 will be a lower figure. So I will buy GBP from bank X. So what is our final conclusion? That we will first convert CHF into USD and then we'll convert USD into GBP. So we will buy USD from bank Y and will buy GBP from bank X. Is it right? So that will give me the rate between CHF per GBP. So write down please. I have tried to explain. This is actually, you should know something already. Up to this we have written. So CHF per USD I will take 1 by 1.0753. This is bank Y, and USD per GBP I will take 1 divided by 1.49. This is cheaper in bank X. This is cheaper in bank X. So therefore my answer is 0.7785 CHF per GBP. Okay. The question is, if you want 1 million GBP, if you want 1 million GBP, then how much CHF would be required? 1 GBP you need 0.7785 CHF. 1 GBP is equal to 0.7785 CHF. 1 million GBP is equal to how many CHF? Come on, please reply. So you simply multiply arithmetic. 10 lakh into 0.7785. So my first answer is 778500 CHF. This answer is right if you interpret the rate as it is. Now we'll come to next question. What is the implied swap point based on bank A quotes for 5 months? Very important question we are doing. This is a question from SFM MTP April 2023, question 1A. Those who have joined late. So write down calculation of implied swap points. Right hand side 2 columns. Bid rate, ask rate. Bid rate, ask rate. First we'll write down spot rate. Question in front of you. Question can be downloaded from our website vino.in. Spot rate in the first line USD per CHF is buying rate 1.0750, ask rate 1.0755. Spot rate below in the question book GBP per USD 1.1945, 1.1960. So can I find out the spot as per the question? We have to find out the rate GBP per CHF. If you look at the question second part, you have to find the rate GBP per CHF. So GBP per CHF applying cross rate GBP by USD into USD by CHF. USD cancelled. This is GBP per USD and this is USD per CHF. So just multiply the two figures, A into B. Just multiply the two figures. You will get 1.2841. Check the answer, 1.2841, and you multiply ask rates also. You will get 1.2863. Ask rate should be greater than bid rate. Overall check. Point number D. Now they have given you swap points. Swap points for USD per CHF. Swap points for USD per CHF for 3 months, 5 and 10, for 6 months, 8 and 16. So what will be swap points for 5 months? Since you are intelligent student, please reply. Swap points for 5 months. So for 3 months it is 5, for 6 months it is 8. So 5, 8. Somewhere between these two numbers, you will have a swap points between 5 and 8. So 5. What is the change here? 3 months. And how much change do we want? Only 2 months. So the proportionate swap points for 5 months will be 5 plus 2 by 3. 5 plus 2 by 3 into the gap. 5 plus proportionate 2 by 3 into what is the change for 3 months. For 3 months it has changed from 5 to 8. So for 2 months it should have changed by 2 points only. So I will write like this. Please write down 5 plus, this is 5. This is the gap, 8 minus 5. This is the proportion, 2 by 3. So it comes to 7. Now try the next month, it will increase your confidence. This is a very important question for exam. If they ask this question as it is, and if you have not practiced before going to the exam, probably you can make mistake or you will take more time. You may do it, it's easy, but you may take more time. So here it comes the next answer, 10 plus 16 minus 10 into 2 by 3. This is 10, this is the gap, this is the proportion. So now write down 5-month forward rate for USD per CHF. 5-month forward rate for USD per CHF. How do you get forward rate? You will take spot rate. You will take spot rate and you will add the premium. You will take forward spot rate plus premium. So you will get 1.0750 plus premium 0.0007, 1.0757. Try the next month. Try the next column. Try the next column ask rate. Take 1.0755 plus 0.0014. So that will give you 1.0769. 1.0769. 1.0769. It should be 0.0014. I'll just correct it. Okay, now let us try for GBP per USD. Swap point for GBP per USD. 3 months, come on, 3 months given in the question. 25, 20, 6 months, 37, 26. So 5 months will be this 25 plus the difference 37 minus 25 into 2 by 3 proportionate. So this comes to 33. Check. Try this one. Try next column yourself. Try next column yourself. 20 plus 26 minus 20 into 2 by 3. That is 24. Now wait. This is GBP per USD spot rate. Look at this 33 and 24. It means GBP per USD is at discount because it is in decreasing order. So what you will do? Take spot rate minus discount. Take spot rate minus discount. That will give you 5-month forward GBP per USD. 5-month forward GBP per USD. So you will please take 1.1945 minus 0.0033. So that will give you 1.1912. Similarly, take 1.1960 minus 0.0024. That will give you 1.1936. 1.1936. Now, interesting thing. You have got USD per CHF. You have got GBP per USD. But what they want? They want GBP per CHF. So again you will apply this rule, cross rate rule, and you will be able to find out 5-month forward GBP per CHF. Yes or no? So what you do? Multiply point number E and point number G. What will you get? You will get 5-month forward GBP per CHF. 5-month forward GBP per CHF. So just multiply point number E into G. So that will give you 1.2814. Come on, next 1.2854. Now this is the forward rate and point number C spot rate. Difference between forward minus spot will give you the premium or discount. Will give you the premium or discount. So let us see. The forward is lower than the spot. Can you see forward? Point last is 14 and it is 41. Forward is less than spot. So please reply fast. Those who are on YouTube directly watching. Is GBP per CHF at discount or premium? Because forward rate is below spot rate, it is at discount. So write down 5 months swap points discount. Take the difference between 1.2814 minus 1.2841, H minus C, but don't write negative sign. 0.0027. Next column you will try an answer. Next column you will try an answer. Come on student. So 0.00 9. This is your answer after so much of hard work. Okay. So my forward discount is 27 points and 9 points. My forward discount is 27 point and 9 point. So one student Sagar has replied it will be at discount. You are right. Very good. This is our answer, which you can write in the exam by writing the assumption at the beginning that the given rate is USD for 1 CHF and GBP for 1 USD. Now I will also explain the institute answer, because that will be your query. In case if you have attempted this MTP, you will be interested in knowing this first answer. So ICI answer. What ICI has assumed, very extraordinary, very difficult for the student to understand it. ICI has assumed that, write down, ICI has assumed that the rate given is 1 USD is equal to CHF and 1 GBP is equal to USD. So what you do, in your question book it is written USD per CHF 1.0750, 1.0755. So you just cut this and you make it CHF per USD. You make it CHF per USD, and below it is given GBP per USD 1.1945. I am only writing for bank A. You can do the same thing for bank Y also, 1.1960. So you cut this and you write it USD, write in both bank X column also and bank Y. Okay. And somewhere in the second question below, last line, they have written GBP per CHF. In the second question, last second line, you cut it and you make it CHF per GBP. So everywhere the institute has a reverse interpretation. I can't help it. If you are interested in knowing, you have to change the question by cutting USD per CHF, make it CHF per USD, GBP per USD you cut, make it USD per GBP, and in the last question GBP per CHF you will cut and you will make it CHF per GBP. Is it right? This is what your dear institute has done. Next line write down. Next line write down, since the requirement is for minimum CHF. Since the requirement is for minimum CHF, let us see, this is the quote of bank X and the quote of bank Y is 1.0753, 1.0760. So where we will get USD cheaper if these are the rates? So USD is cheaper at which bank? This one. USD you will buy from bank X because you need ask rate. This is cheaper, 1.0755 tick mark, 1.0755 tick mark. Okay. Now this is the rate for GBP given by bank X, and the rate for GBP given by bank Y is 1.1940, 1.1960, sorry, 1.1950. So which is cheaper? This is cheaper. 1.1950 is cheaper. So I will purchase USD from bank X and I will purchase GBP from bank Y. I will purchase USD from bank X because you can see bank X has a lower ask rate for USD and bank Y has a lower ask rate for GBP. So my strategy would be buy first dollar from bank X, and using that dollar you can buy GBP from bank Y. So write down below, first buy USD against CHF from bank X, because you can see 1.0755 is lower than 1.0760, and second buy GBP against USD from bank Y, 1.1950 is lower than 1.1960. So this was a little difficult part, otherwise the question is easy. Now write down the cross rate formula. CHF per GBP is equal to, I need CHF per GBP, CHF per USD into USD per GBP. We have already decided for CHF per USD I will take 1.0755, the lower of the two rate, and for USD per GBP I will take 1.1950, the lower of the two rates. I hope you are understanding. Our objective is to find how much minimum CHF I have to pay. So I will buy USD from bank X, I will buy GBP from bank Y. So my rate is 1.2852 CHF per USD. Is it right? So what is the total amount payable for 1 million? There is a small mistake here. It should be CHF per GBP. So what is the amount payable for 1 million GBP? 1 GBP 1.2852 CHF. So 10 lakh GBP is equal to 10 lakh into 1.2852, 1285 200. This is your first answer. This is ICI answer. I have already given my answer, which was very low compared to this. Okay, everybody please participate. This is a little lengthy question and I have already solved it twice. Okay, please subscribe to YouTube channel, like, share. Okay, comment if you have something to offer. Calculation of implied swap point based on bank A. अपने दोस्तों को भी बोलना है for subscribing to the channel. Calculation of implied swap point based on bank A quotes. Students, please follow me. Bid rate, ask rate. So spot rate we will write CHF per USD. We have decided to interpret like this. It is not USD per CHF. It is actually CHF per USD, because USD is expensive than CHF, but your institute has written reverse. Can't help it. USD per GBP spot rate 1.1945, 1.1960. So I have to now calculate CHF per GBP. CHF per GBP will be CHF divided by CHF per USD into USD upon GBP. So this is CHF per USD, this is USD per GBP. So directly multiply A into B, A into B, A into B, 1.2841, 1.2863. Now we'll solve in the same way. Swap points for CHF per USD. Swap points given in the question. Same thing copied. 3 months 5, 10, 6 months 8 and 16. So 5 months will be like the previous calculation. Take 5 plus 8 minus 5 into 2 by 3, 7. And next column will be 10 plus 16 minus 10 into 2 by 3, 14. So 5-month forward rate, CHF per USD, this is first line is CHF per USD. You will add the swap point here because it is in ascending order. So A plus D, 1.0757, 1.0769. Now we'll do it for USD per GBP. Swap points USD per GBP, 3 months, 6 months. Find out for 5 months. Same calculation, 25 plus 37 minus 25 into 2 by 3. We are solving a very important question. Number 1A from April MTP 33 and 24. 5 months forward USD per GBP. 5 month forward USD per GBP. Now what you will do? You will take this point number B minus, because it is in descending order, minus. You will get B minus F because the swap points are in descending order. So discount 1.1912, 1.1936. Now you have got this highlighted line is CHF per USD. This is USD per GBP. What will you get if you multiply the two? You will get CHF per GBP. Solve. 1.2814, 1.2854. Now what is the swap points? 5 month swap points for CHF per GBP. 5 month swap points for CHF per GBP. So this is spot CHF per GBP. This is 5 month forward rate. Compare these two. The difference is premium or discount point. Because the forward rate is lower than the spot rate, it is at a discount. So take the difference, 0.0027, 0.0009, and the answer is last line. 5 month swap points are at a discount of 27 and 9. 27 is for buying rate, 9 is for ask rate. Did you like this answer? This is institute answer. Institute has interpreted in a different way. Now we'll come to another past exam question for 8 marks. This is also past exam question. Most of the question in this MTP were from past exams. Okay. Shiva has a fund of rupees 5 lakh. In the original question it was Indra. They have made Indra to Shiva. Institute has got so much power, it can convert Indra into Shiva. Okay, amazing. Which he wants to invest in share market with rebalancing target after every 15 days to start with, or a period of 1 month from now. So he wants to rebalance his portfolio after every 15 days for a period of 1 month. The present Nifty today, spot Nifty is 17025. The minimum Nifty within a 1 month can be at the most 15322.50. So Nifty can decline by how much? Nifty according to expectation can decline by this points, and if you want to convert into percentage, 17025 minus 15322.5 divided by 17025, and that will give you 10% approximately. So you are expecting that Nifty in 1 month at the most can decline by 10%. So you may lose 10% of your investment if you invest in Nifty. He wants to know as to how he should rebalance his portfolio under the following situation according to the theory of constant proportion portfolio insurance. This is CPPI. Same question was asked in the exam long back. Now they have repeated using 2 as a multiplier. So in CPPI, the amount to be invested in equity is equal to multiplier into asset value minus floor value. So asset value today is 5 lakh. Multiplier they have given 2. Floor value you have to decide. Based on the information given, floor value you have to decide. So he will say that my asset is 5 lakh and at the most I can afford to lose 10%. So we will take floor value F is equal to 4,50,000. That was the missing figure. Based on the information given, we can assume that floor value is 4,50,000. Shabash Dongrid, keep answering. Okay. Now the question is, what will be his portfolio to start with? How you will rebalance his portfolio after 15 days? How you will rebalance your portfolio after 15 days if Nifty falls to 1632.1.89 and after further 15 days, how will you rebalance your portfolio if Nifty touches 17512.14? Okay. Assume that the value of his equity component will change in tandem with that of Nifty. So if the Nifty goes up or goes down, the equity value will also go down. If Nifty goes up, equity value will also go up proportionately. So let us write down. First we'll find out what is maximum decline in 1 month. Maximum decline in 1 month is the difference between spot Nifty and how much Nifty can decline to after 1 month divided by 17025. So that gives me 10%. Keep replying. Yes, come on. So it is assumed that investor will select floor value. It is assumed that investor will select floor value equal to 5 lakh minus 10%. 5 lakh minus 10%. This is the 10%. And 5 lakh is the asset he has in the beginning. 4,50,000. Now we'll calculate how much amount is going to invest in equity and how much amount is going to invest in bond. First we'll calculate equity. Bond is the balancing figure. So write down case 1 immediately to start with. Under that write down investment in equity. Formula is multiplier into asset value minus floor value. Anybody wants to reply? Multiplier is to total amount available is 5 lakh minus floor value 4,50,000. Anybody wants to reply? Day 1 investment in equity will be 1 lakh. And how much assets does he have? 5 lakh. Therefore investment in bond will be 5 lakh minus 1 lakh, 4 lakh. Now understand, after 15 days, your investment in equity will change as the market will change. In the problem, interest rate is not given. If interest rate is not given, we will not consider change in investment in bond, and we will not consider change in floor value. Otherwise, we assume that floor value and investment value will also change according to the interest given. Very good, Sagar. Come on, next, after 15 days, now show your intelligence. After 15 days, value of equity will be proportionate. 1 lakh he had invested. Now the Nifty is 1631.89 divided by 17025. What will be the value of equity now? What will be the value of equity now? It will fall. It will fall to 95870. Come on, next. Value of bond will be same. Nothing is given about interest. 4 lakh. So my asset value A plus B. Asset value A plus B 495870. So I have to rebalance now. After every 15 days, we have to rebalance. So this is my asset value. Multiplier is 2. Floor value is 4,50,000. So I am asking our student one question. What will be the investment in equity now after 15 days, after rebalancing? So you will write 2 into, this is my asset value, this is floor value, so this comes to 91,740. This is my total asset value. Now I am going to invest only 91,740. So what is the amount to be invested in bond after 15 days? So investment in bond will be C minus D. Come on, very good, Meera. C minus D, 4,04,130. Please reply, 4,04,130. So what is the action you will do? You have to reduce the equity. You have to reduce the equity means sell equity, and you have to increase the bond. So sell equity and buy bond. Yadav, this time you are wrong. Check your calculation again. You will sell equity of 4130 and buy bonds of 4130. This is a very important question. Please mark important. Question number 1B from MTP April 23. Question is available on our website vino.in. So please keep replying. The first part is clear now. So now we have, this is the investment in equity, this is investment in bond. So I will require these two numbers in the next calculation now. Write down case 3. After another 15 days. Question in front of you. Question should be in front of you. So I will write value of equity 91740 was the value of investment in equity in the previous calculation. This is the Nifty now, and this was the Nifty 15 days ago. So my value of equity will increase proportionately. Meera is right. Come on. Now the value of equity will be 98430. Value of bond, previous answer as computed in case 2. as computed in case 2. So my asset value will be 5,02,560. 5,02,560. Investment in equity. This time you will reply. Investment in equity will be how much? Give me the answer here. Give me the answer. 2 into 5,02,560 minus 4,50,000. So 1,05,120. Very good, Yadav. Investment in bond will be total asset value minus equity. Total asset value minus equity. Come on, reply. So this time my investment in bond will be 397,440. Now first understand, this is your equity value right now before rebalancing. This is the value of equity you want after rebalancing. So what action on equity you are going to take? What action on equity you are going to take? Are you going to buy equity or sell equity? Are you going to buy equity or sell equity? So you will say buy equity and sell bond. Sell bond and buy equity of. So what is the value of equity you will buy? Take the difference. 1,05,120 minus 98,430. Yes, come on. 6690. 6690. 6690. Check the answer. Is it 6690? Six six nine zero is right. So this was the answer of this wonderful question. Now we'll come to question number 2A. Theory question you will do yourself. You will get the answer on the Institute MTP. So theory question will not take much time. We'll take directly practical question. This is another interesting question. Let us solve. On the basis of the given information, Mr. XLY wants to create a portfolio equally as risky as the market. Underline. This contains hint. यहाँ पर हिंट छुपा हुआ है. The portfolio risk should be as risky as the market. So portfolio beta should be same as market beta, and all of you know market beta is 1. Market beta is 1. Is it right? So therefore the portfolio beta should be also equal to 1. Now they have given you investment in A and B. Beta of A and B. Stock C, you have to find out what is the investment to be made in stock C and what is the investment to be made in debenture D. Beta of C is 1.60, beta of debenture is 0. How do you recommend and interpret the risk scenario and investment in all the securities? So very good. So now write down one note. Very easy question actually. All of you know that beta of this market portfolio is 1. So we have to solve an equation where weighted average beta of the portfolio will also be equal to 1. Total funds available for investment, write down 20 lakh. I have simplified the answer. Institute answer is little lengthy. Total funds available for investment is equal to 20 lakh. Then write down amount invested in stock A and stock B. Amount invested in stock A and stock B already given in the problem. 4 lakh plus 5 lakh is 9 lakh. 9 lakh is already exhausted. So write down remaining amount. The remaining amount is 20 lakh minus 9 lakh. So the remaining amount is equal to 11 lakh. So out of this 11 lakh, I have to find out how much will be invested in the stock C and debenture D, right? Let investment in stock C and debenture D be X and 11 lakh minus X respectively. X and 11 lakh minus X respectively. Come on, keep replying. Then write down one note. Portfolio beta is equal to market portfolio beta. Portfolio beta is equal to market portfolio beta. And all of you know market portfolio beta is equal to 1. Portfolio beta is weighted average beta. So I'll multiply. First amount is 4 lakh into beta 0.7 plus second amount is 5 lakh into 1.1. Third amount we have assumed X into 1.60. Fourth amount we have assumed 11 lakh minus X into 0 and divide by the total amount 20 lakh. Divide by the total amount 20 lakh. Otherwise first you can compute their weights and then solve. So now you will solve this equation. 20 lakh into 1 is 20 lakh and the numerator is simplified now. 4 lakh into 0.7, 5 lakh into 1.1 and this is 1.6x. So can you solve and give me the value of x? Come on Meera, Sagar, Jain. So the answer would be x is equal to 7,31,250. So our first answer is investment in stock C will be 731,250. Now reply investment in debenture D. Investment in debenture D will be 11 lakh minus 731,250. Come on, the answer is, please reply. How much? 368,750. 368,750. So this is 25 to 30 years, which are relevant in today's syllabus also. And therefore, I will urge you, I will highly recommend that you can purchase our SFM video lecture from our website vinod.in. These lectures are available in 2 languages, English and Hindi. According to your comfort, you can purchase. अगर आपको हिंदी ठीक लगती है तो हिंदी में purchase कीजिए. If you want English, you can buy in English. And even revision lectures are available in English and Hindi. So you can buy from our website vinod.in. And please also recommend to your friends, because many students may not be aware that we are covering the entire syllabus in detail, and we are also telling you how to present the answer in the exam, and wherever applicable I am giving you alternative answers also. So maybe if you have time in the exam, you can write alternative answers also. So let us go to question number 2b. Question number 2b. Please take the printout of the MTP, keep it in front of you. This question is more like an accounts question, less like a financial management question. Following is the balance sheet of PK. Oh, my favorite movie PK. On 31st March 2015. Rupees in lakhs. Equity and liability shareholder fund equity share capital of 10 rupees each. 900 lakhs. 10% preference share capital of 100 rupees each. 300 lakh. Reserve is negative. So this company has a huge negative reserve, losses in the balance sheet. Under non-current liability, you have term loan. Current liabilities, you have trade payable. And then total. Asset side, non-current asset, inventory, receivable, cash. Messrs. PK did not perform well, so sad, and has suffered sizable loss, again so sad, during the last few years. However, it is now felt that the company can be nursed back to the health by proper financial restructuring. So this is a question on corporate restructuring, and consequently the following scheme of reconstruction have been designed. Now you will find that this question is like your intermediate question. Okay, you have studied in intermediate one chapter called internal reconstruction. Same problem. Equity share will be reduced to rupees 2 per share fully paid. Right now it is 10 rupees. It will be reduced to 2 rupees. So there are 90 lakh shares, and the sacrifice made by the equity shareholder is 8 rupees. So 720 is the reduction in equity share capital. You must have done it in the accounts. Preference shares are to be reduced by rupees 50 per share. So preference share capital is right now 3 lakh. From 100 it will become 50. So preference share capital will be reduced by 150 lakh. And the dividend on preference share is reduced by 2%. So right now dividend is 10%, it will become 8%. Trade payables have agreed to forgo 40% of their existing claim. Very good. So even trade payable will sacrifice 40% of 400, that is 160. So they will say we will forgo 40%, and for the balance, means 60% is the balance, 50% they have agreed to convert their claim into equity share of rupees 2 each. So they will have to be issued equity share 50% of 400, that is 200 divided by equity share 2. So they will have to be issued 100 lakhs equity share of 2 rupees each. So this is 40%, this is 50. Remaining 10% will still appear in the balance sheet. Remaining 10% will still appear in the balance sheet. So in the balance sheet, trade payable will appear 10% of 400, 40 lakh. Then in order to make payment of term loan, there is a term loan of 400 in the balance sheet. Company will issue 200 lakh equity share of 2 rupees. So in the balance sheet, equity share capital will increase here by 200 lakh share, 100 lakh share because of trade payable, and 90 lakh existing shares are there. So total number of equity share will become 200 plus 100 plus 90. Each at par, entire sum is required to be paid on application. Non-current asset will be revalued at 500 lakh. There is 1000 rupees non-current asset. It will be reduced by 500. So now the balance in non-current asset will be 500. You are required to show the impact of financial restructuring. That is how your share capital, reserve, preference share, loan will get affected because of the financial restructuring. And then an accounting question, prepare balance sheet after restructuring. So let us see first what will be the net gain or loss due to financial restructuring. What will be net gain or loss due to financial restructuring? Write down. I will show you how much is the net gain or loss due to financial restructuring. A company which is undergoing losses will have to reduce the value of the asset if it is overvalued. Most importantly, the share capital have to reduce so that the losses can be wiped out from the balance sheet. So write down net gain or loss. Who are going to contribute in this scheme of restructuring? Equity shareholder, preference shareholder, trade payable. So that is a gain to the company. First gain, write down reduction in equity share capital. Reduction in equity share capital. 90 lakh share into 8 rupees. Share of 10 has become share of 2. 8 rupees is the gain, and that is 720 is the reduction in equity share capital. Then write down reduction in preference capital. So there we have 3 lakh preference share, and preference share will be reduced by 50 rupees. So that is 150. Then write down trade payable, 40% of 400, 160. So total sacrifice made by shareholder and creditor is 1030. And there is a loss also. You have to write off the non-current asset. So less reduction in non-current asset by 500 rupees. So what is the net gain on restructuring? 530. Net gain on restructuring is 530. So the question is, what will you do with this 530? If you look at the balance sheet, there is already a negative reserve of 500. So out of 530, 500 negative P&L account will be wiped off. Remaining 30 will be transferred to capital reserve. Oh, now you remember your happy days of intermediate. Write down the net gain of rupees 530 lakh. The net gain of rupees 530 lakh will be used to write off negative balance of reserve and surplus of rupees 500 lakh. Negative balance of reserve and surplus of rupees 500 lakh. And remaining rupees 30 lakh will be transferred to capital reserve. Remaining rupees 30 lakh will be transferred to capital reserve. So this will be one effect of financial restructuring. Now let us see what will be the effect on equity share capital. So write down step number 2, equity share capital balance. Equity share capital balance. In the institute answer, this step 2 is not there, but I feel it should be written. It will show the movement in equity share capital. If you write it, it will be good. Right hand side rupees in lakh. Point number A, equity share capital after reduction. Equity share capital after reduction, 900 minus 720, 180. Then second point B, write down equity shares issued to trade payable. Equity share issued to trade payable, 400 into 50%. 400 into 50%. Out of 400, 50% was settled by issue of equity share amount 200, and then fresh equity share issued. Fresh equity share issued is 200 into 2, 400. So total equity share capital in the balance sheet. Total equity share capital in the balance sheet would be 780. In bracket write down 390 lakh equity share of rupees 2 each. 390 lakh equity share of rupees 2 each. Any query, ask me, I'll wait. Any query, please ask, I'll wait. No query. Now write down next step 3, revised preference share capital. Revised preference share capital. Preference share capital will be now, number will be same 3 lakh. Dividend rate will become 8%, 10 minus 2. So write down 3 lakh 8% preference share of rupees 50 each. 3 lakh 8% preference share of rupees 50 each is 150 lakh. Is 150 lakh. So this will be the change in the share capital. Now write down step 4, revised trade payable. Revised trade payable. So what happens to trade payable? Balance as per balance sheet is 400. Balance as per balance sheet is 400. Then the creditors have waived off 40% of 400. So 400 of 40% of 400, 160, and plus trade payable of 200 lakhs were converted into share capital. So less converted into equity share capital will be 200. So what is the balance in the balance sheet now? 40. I will show 40 in the balance sheet. Understood? So I have prepared all working note. What about term loan? Term loan will become 0 because it has been repaid. So this is my balance sheet. Write down step 5. Keep the notebook in front of you and write. Balance sheet after reconstruction, rupees in lakh. Rupees in lakh. First we'll follow the same format which is given in the question. Your query can be, can I follow the format of Ind AS? You can follow, no harm in that, but don't unnecessarily complicate the matter. Preferably in SFM paper, follow the format given in the question. Of course, you can change the format as per Ind AS also, where asset will be written first and equity and liabilities will be written later. Not a serious matter, right? Shareholder fund, equity share capital, 390 lakh equity share of rupees 2 each, 780. 8% preference share capital, 8% preference share capital, 3 lakh preference share of 50 each, 150. Then write down below that reserve and surplus. Under reserve and surplus, please write capital reserve, already calculated 30. Non-current liability term loan, it was 400, repaid 400, so balance is 0. Current liabilities trade payable. Current liabilities trade payable. Working note, we have prepared working on that. 40. Take the total of the asset side. Come on, reply. I need to check whether you are listening to me or not. What is the total of balance sheet liability side? Please reply. Yes. The total is 1000. Write down asset side. Non-current asset will reduce by 500. So 1000 minus 500 is 500. Current asset, right, same figure. No change in inventory, no change in trade receivable, no change in cash and bank balance. Take the asset side total 1000. So balance sheet tallied. At least this much you can do. Now our institute in the answer of this MTP has not given this note on impact of financial restructuring, which I am dictating to you. So please note down. Institute answer does not have this note. You will write, I will dictate, write down, or you can take a screenshot of this note, whatever comforts you. जो ठीक लगे करो, either screenshot ले लो या फिर लिख लो. तो first point लिखना है, equity share capital and preference share capital has been reduced. Equity share capital and preference share capital has been reduced. सेकेंड नोट लिखना है द लॉन्ग टर्म डेट इज रिड्यूस्ड, द लॉन्ग टर्म डेट इज रिड्यूस्ड ड्यू टू रीपेमेंट ऑफ टर्म लोन, due to repayment of term loan. So the company has become a debt-free company. The company has become a debt-free company. Third note, write down, non-current assets have been brought to their fair values. Non-current assets have been brought to their fair values. Non-current assets have been brought to their fair values. Note number 4, the negative reserves have been eliminated. The negative reserves have been eliminated. The negative reserves have been eliminated. And the fifth note, write, being debt free and more realistic value of assets comma, in future earnings would improve. In future earnings would improve. So this is the note you should write for this question. Mark this question also as important because this question was asked long back and now after many years they are repeating. Question number 3A. This question was there in one RTP 2 years ago. This question was as it is there in the RTP. Now they have asked in MTP. Write down important. This you may not have done in your regular class. One student has a query in this previous question, interesting query. How cash balance is same? Because we have issued equity share of 400 lakh issued, which was used to pay term loan. There is no other cash transaction. Equity share of 400 lakh was raised to repay the term loan of 400 lakh. So 400 inflow minus 400 outflow. The existing cash balance appearing in the balance sheet will remain same. So that was a very good question and that is the answer. Cash balance will not change because the inflow and outflow was same. Okay, so now I was telling you about question number 3A. This question is on short selling. Very good question. Write down important for exam. Mr. A is holding 1000 share of the face value of 100 rupees each. So one Mr. A is holding 1000 share of 100 each of Messrs. ABC Limited. He wants to hold these shares for long term and has no intention to sell. On 1st January 2020, Messrs. XYZ, there is another entity XYZ, has made short sale. Short sale means selling now and buying later. Sell now, buy later. But how will you sell now? By borrowing shares. By borrowing shares. By borrowing the shares. And has approached Mr. A to lend his shares under stock lending scheme. So now what will happen? Mr. A will lend the shares to XYZ under the stock lending scheme with the following terms. Shares to be borrowed for 3 months from 1/1/2020 to 31st March 2020. So it's a 3 months period. So this transaction will be over on 31st March 2020. What about lending charges? Mr. A will earn lending charges. and the company XYZ will pay lending charges to Mr. A, which is 1% to be paid every month on the closing price of the stock quoted in the stock exchange. So this is stock lending charges, 1% of closing price. Okay, and multiplied by 1000 because there are 1000 shares. Now next is bank guarantee will be provided as collateral for the value as on 1/1/2020. Who will provide bank guarantee? Bank guarantee will be provided by XYZ. So therefore XYZ will have to pay to the bank the guarantee fees also, bank guarantee fees also. Cost of bank guarantee is 8% per annum. Who will pay this 8% per annum? XYZ will pay to the bank for providing guarantee. Since it is a 3 months problem, while calculating the bank guarantee fees, multiply by 3 by 12. Multiply by 3 by 12. Otherwise, you can make mistake. On 29th March 2020, Messrs. XYZ declared dividend of 20%. So 20% of what? So 20% of face value 100 rupees. So dividend per share will be 25% into 100, 25 rupees. Dividend will be compensated by XYZ to Mr. A. Dividend will be compensated by XYZ to Mr. A, 25 rupees per share. The short seller will compensate for any dividend paid during this period to the stock lender. Now next is closing price of Messrs. ABC was quoted on the stock exchange on various dates as follows. So these are the prices. Now they have given you two questions. Assume that scenario 1 is bullish and assume that scenario 2 is also bullish. Is it bullish written in the problem? Yes, both scenario they have written bullish, but actually this is a mistake in the question. It should be bearish because you see below the prices are falling. Prices यहाँ पे कम हो रही है, so they should have mentioned the heading bearish, but the institute have written bullish. Anyway, based on number we have to answer. These prices will be required for calculating stock lending charges. Prices will be required for calculating stock lending charges. And secondly, these closing prices will be used for calculating gain or loss on short selling. Will be used for calculating gain or loss on short selling. Okay. So the question number 1 is find out earnings of Mr. A through stock lending scheme in both scenario. Very easy. Total earning of Mr. A in both the scenario. Again very easy, just multiply by 1000. Previous answer multiply by 1000. What is the profit or loss to Messrs. XYZ? Now you have to also look at the question from XYZ point of view by shorting the shares using stock lending scheme in both the scenarios. So this is a good question. So first we'll solve for Mr. A. Please write down the answer. How will you present the answer? This question you may not have done earlier. So I will ask you to take your notebook and write it down along with me. This will give you confidence that you can answer such question in the exam. Write down step 1. Earning of Mr. A through stock lending scheme. Earning of Mr. A through stock lending scheme, right hand side 2 columns. right hand side two columns, scenario 1 and scenario 2. So Mr. A will get lending fees. Mr. A will also get dividend. That will be his income from the stock. So first write lending fees. On 31st March 2020, in scenario 1, the price is 1020. First we'll do calculation for one share, then multiply by 1000 later. So in scenario 1 he will get 10.20. In scenario 2 he'll get 980 into 1%. 28th February 2020. Question in front of you. The price is 1040 in scenario 1, 1040 into 1% and 960 into 1%. 10.40, 9.60. 31st March 2020, 1050 into 1% in scenario 1, 10.50, 940 into 1%, 9.40. Very easy. So that total from stock lending, write down total earning from lending. You will add the previous three figures, 31.10, 28.8. Then write down total earning from 1000 shares. Total earning from 1000 shares, that will be 31,100 and 28,800 and 28,800. Now write down dividend per share. The short seller will compensate the lender for any dividend paid during these 3 months. So dividend per share is 100 into 25%. Total dividend write down on 1000 share, 25,000. So total earnings will be lending income plus dividend income, B plus D, will be 56,100 in the first scenario and 53,800 in the second scenario. So this is your first answer and second answer. You will get approximately 4 to 5 marks for this much effort. Now you write down calculation of profit or loss to Messrs XYZ by shorting the shares, through the stock lending scheme, by shorting the shares through the stock lending scheme, by shorting the shares through the stock lending scheme. Again two columns, scenario 1 and scenario 2. This company has to first calculate gain or loss due to shorting the share. This company had done short selling at 1000 rupees. Question in front of you, 1000 rupees, and now at the end of 3 months the market price is 1050. Price has gone up. All of you know, if price goes up, short seller will lose. Short seller will lose. If the price goes up, the short seller will lose. This question has a small mistake. They have not mentioned at what price short selling was done. If you read the problem carefully, there appears to be a mistake. You have to mention in the question that the short selling was done at 1000 rupees. Somewhere in the question you have to add, somewhere in the question, short selling was done by XYZ at rupees 1000. This they have not mentioned clearly. And in the second scenario, the price has gone down. The price goes down, short seller will gain. So 60 rupees gain. Lending fees paid, already calculated. Lending fees paid per share. Go to previous step 1. Step 1. And the step 1, lending fees you will find 28.80. Then write down bank guarantee charges 1000 rupee into 8% for 3 months. 1000 into 8% for 3 months. So the bank guarantee charges are 20. So gain or loss per share, take the total of these three numbers carefully. Negative, negative, negative. So 101.10 loss in scenario 1. Positive, negative, negative. So net gain 11.20 per share. Total gain or loss on 1000 share. Total gain or loss on 1000 share. First column is total gain or loss. Sagar is right. 1,01,100. Second column 11,200 gain. This is gain. This is loss. But this is the institute answer. There is one small mistake in this answer. What is the mistake? Can you guess the mistake? Spot the mistake in the answer. The mistake is this short seller XYZ has to pay dividend, compensate the loss of dividend to the lender. So you will write one more thing which institute has not written. Less dividend to be compensated to stock lender. Dividend to be compensated to stock lender, 25 rupees into 1000, 25,000. 25,000. So net loss in the first scenario will be, already there is a loss of 1,01,100 and plus 25,000. So 1,26,100 will be the loss if you consider dividend also, which the short seller has to compensate to the stock lender. And in the second scenario, the net loss would be 13,800. In the second scenario, the net loss will be 13,800. Now write down question number 3B. Question 3B, same question was asked in November 2020 exam for 8 marks. Okay, they are just copying and pasting from earlier exams, which means the student has to solve all past exam question very nicely. Okay, in our class note we have covered all past exam question, RTP, MTP question. That is why it is little bulky, and sometimes the size of video lecture is also high. But then now the student will understand the benefit that when you solve all questions in the class, you are more confident in the exam. Following are the three mutual funds: growth fund, balance fund, regular fund, and this is market detail. Market detail will be required for some calculations. This is their average return. This is variance, means sigma square, standard deviation square. Coefficient of determination means R square, correlation square. If you don't know this, you won't be able to solve and you will lose 8 marks. The yield on 182 days treasury bill is 9% per annum. So RF is 9%. Rank the funds as per Sharpe ratio. Average return minus risk-free return upon sigma. Trainer ratio R minus RF upon beta, and you have to rank. Compare the performance with the market. Compare the performance with the market. So for market also we'll compute Sharpe and trainer. I need sigma. Variance is given. I'll take square root. I need beta. So I have to apply the formula for beta R into sigma E upon sigma M. This will give me beta. So first what I should do? First we should find out the standard deviation and beta from the given information, and then we can compute Sharpe and trainer ratio. So write down step 1. Very easy question, only use of formula. Very easy. Start. Calculation of standard deviation and beta. Calculation of standard deviation and beta. Right hand side 4 columns. Please write down growth fund, balance fund, regular fund and market. Presentation is equally important. This you will learn when you solve with me. Given variance in the question 92.16, 54.76, 40.96 and 57.76. Standard deviation, write down sigma, that is variance, square root of variance, square root of variance. Type on your calculator 92.16, press the square root function. Tell me the answer. Yes, come on. What is the answer? 9.60. Very good. Next one. Come on, answer. 7.40. Next one, answer please. 6.40. Market also 7.60. Now write down coefficient of determination, R square. Everybody should participate. R square is given 0.3025, 0.6561, 0.9604. Very good. So now you tell me coefficient of correlation, which is under root R square. Under root R square. Again take your calculator. Mr. Dongre, 0.55 is right. Amazing. Next one. 0.81. Come on, next one. 0.98. Now we will compute beta. The formula for beta in this example, R into sigma S upon sigma M. Where is R? This is R. Where is sigma S? This is sigma S. And this is sigma M. 0.55 into 9.6 divide by 7.60. So that comes to 0.695. Very good. Next one. Come on, keep replying. Keep replying. Next one. 0.81 into 7.40 divided by 7.60. 0.789, and in the same way you will get the third answer, 0.825. You can write in 3 digits or 4 digits. One student is saying 6947. This is also right. you can write in 3 or 4 digits. Now we'll compute Sharpe ratio and trainer ratio and give the ranking also as per Sharpe and trainer. So next heading is calculation of Sharpe ratio and trainer ratio. Calculation of Sharpe ratio and trainer ratio. Please reply. Draw the format first. Fund, Sharpe ratio, trainer ratio, ranking. Under ranking, draw two columns, Sharpe, trainer. First write down growth fund. Growth fund R minus RF. Look at the question. Return is 7. Risk-free return is 9. 7 minus 9 divided by standard deviation 9.60. 0.208. Trainer ratio 7 minus 9 divided by 0.695 beta. First we'll complete these two columns, then we'll give ranking. For balance fund, 6 minus 9 divided by 7.40 minus 0.405 and 6 minus 9 divided by 0.789 minus 3.802. Come on, regular fund, try yourself. Yes, reply. Regular fund Sharpe ratio minus 0.625 minus 4.84 minus 4.84. Now let us rank them. All are negative. Lower negative is better than higher negative. So rank will be 1 for growth fund under Sharpe. Then this is between the two, second, and this is worst, third rank. Same thing for trainer. This is first rank because it is the lowest negative. This is the highest negative. So 1, 2, 3. So all are negative, but we have to give rank because the question wants us to rank them. So this is my second answer. Now we have to also find out the Sharpe ratio and trainer ratio for the market and compare. So student will write step 3. Step 3. Calculation of Sharpe ratio and trainer ratio of the market. Calculation of Sharpe ratio and trainer ratio of the market. Student can ask any doubt if they have. Tomorrow we are going to take financial reporting April 23 MTP analysis. FR MTP April 23 analysis will also be taken on the YouTube live at 5 o'clock. So you can watch it live tomorrow at 5 o'clock, or later on you can watch it on the YouTube. You can inform your friends also. FR MTP April 23 live tomorrow at 5 p.m. Sharpe ratio for market will be 9 minus 9 divided by standard deviation. This comes to 0. And trainer ratio 9 minus 9. What is 1? Beta of market. In some earlier problem also we have taken beta of market as 1, so 0. So at least market is 0, but all mutual funds are negative. So who has performed better? Mutual fund is negative. Market is 0. Please reply. Who has performed better? Who has performed better? Mutual fund or the market? Negative return is not good. At least 0 is okay. 0 is better than negative. So write a small note and complete the answer. Note: the performance of the fund is very poor. Performance of the fund is very poor. Yes, Mr. Sagar, you are right. Market is better. Funds have performed very poorly. The performance of the fund is very poor since all values are negative compared to market performance. So we have completed 3 answers in detail out of 6 answers. So I'll just repeat. I have prepared FR and SFM video lecture in English and Hindi, and I have also prepared the revision lectures of FR and SFM, which are also available in English and Hindi. They are going to cover, revision lecture are going to cover all the theory and important questions. Regular lectures will cover almost all questions from study material RTP MTP. So you can subscribe or purchase from our website pino.in. Please also request your friends, suggest your friends to buy, and also subscribe to YouTube channel AS Foundation, because I am going to come out with more classes on MTP, RTP, etc., and also advise your intermediate friends also that they should go to the correct faculty who can teach them conceptually, teach them the presentation. They can ask the doubt whenever they have, either directly online or by mail or WhatsApp. If you have any query, you can mail me at this address. Please note down: vinod_ca@yahoo.com, and our WhatsApp number is 976692180. So you can WhatsApp on this number. When you are sending the query, please write the query in detail. Query should be written in sufficient detail for me to understand, and if possible, send the photo of the question and answer on which you have doubt. This will help me to answer your query quickly and in a better manner. Remaining 3 questions we will take subsequently, because it will take again another 2 hours. So I also and you also need to have a small break. We will take it after some days. It will be announced on our YouTube channel. The second part of this MTP will take it after 1 or 2 days. So thank you everyone for watching this video lecture, and I wish you all the best.